Okay, picture this. Imagine you're dropped right into the middle of a massive multiplayer video game. The graphics are insanely good, the stakes are very real, and you are basically forced to play it every single day of your life. But there is a huge catch. Nobody ever hands you the rulebook. Well, that is exactly what the global financial system is like. I mean, banks create money, governments control it, businesses completely depend on it, and you use it every single day, right? Whether you're buying a game, saving up your allowance, or finally cashing your very first paycheck. Yet practically nobody actually understands how the mechanics of this whole system work. Well, today, we're going to change that. Welcome to This Explainer, where we're going to reveal the actual cheat codes to global finance and break down this entire system for you in under 10 minutes.
So think about this for a second. Imagine waking up tomorrow morning, opening your wallet, and realizing that the cash sitting inside is literally just pieces of paper. Because honestly, it kind of is. Without a massive collective agreement among all of us, that paper has absolutely zero actual value. You can't eat it, you definitely can't build a house with it. It only works because we all share this secret, unspoken trust that it works. Money is built entirely on trust. And once you really grasp that, you start to see the matrix of how our whole economy operates.
To master this game and gain true financial independence, you essentially need to beat these 5 levels. Level 1, what actually is money. 2, the truth about banks. 3, inflation. 4, the power of interest. And level 5, how investing actually builds wealth.
Okay, let's dive into this with level 1, what actually is money? The tool of trust.
Imagine if we just didn't have money at all. If you wanted a fresh pair of sneakers, you'd have to find a shoemaker who wanted exactly what you had to offer. Like maybe you'd have to trade them 10 live chickens or a massive pile of vegetables. That is exhausting, right? And highly inefficient. Instead, money acts as a shortcut. But for this shortcut to actually work in the real world, it has to follow 3 strict rules. First, it's got to store value. So if you save your money today, it needs to still be worth something next month. Second, it absolutely must be accepted everywhere. It does you no good if the pizza place flat out refuses to take it. And third, it has to make trading easier, meaning it's easy to carry around and can be broken down into smaller amounts.
And that brings us to a really crucial concept you need to know. It's an adult vocabulary term, but it's super simple. Fiat currency. The money we use today is fiat currency. It actually doesn't get its value from being backed by physical gold or silver anymore. Nope. It has value simply because the government declares it to be legal tender and, more importantly, because people trust it. That collective trust is the ultimate power source giving value to your allowance or your paycheck. If that trust disappears, the value completely disappears with it.
Moving right along to level 2, the truth about banks, the money creators.
Okay, here is the biggest plot twist in the game of money. Where does it all actually come from? Most people assume the government just prints all of it. But the jaw-dropping truth is that everyday commercial banks, like the regular bank you walk past on the corner, actually create most of the money in our economy through a totally counterintuitive magic trick. It goes like this. Step 1, you deposit your hard-earned cash into a bank for safekeeping. Step 2, someone else walks into that same bank wanting to buy a car, so they take out a loan. But here's the crazy trick. The bank doesn't just hand over your exact existing physical cash. In step 3, the bank literally creates brand new digital money simply by typing numbers into that borrower's account, literally out of thin air. By taking on debt, new digital money is officially born into the circulating economy.
So the crucial point here is understanding what banks actually do. They act as the ultimate middlemen. They collect money from savers and they lend it out to businesses and individuals. Now, the bank pays you a tiny little bit of interest for keeping your money with them, but they turn around and charge borrowers a much, much higher interest rate for a loan. The difference between the interest they charge and the interest they pay you, that becomes their profit. But, this isn't just a scheme to make them rich. By providing this capital, banks actually allow businesses to grow and hire people. Without them, economic growth would just be incredibly slow.
All right, time for level 3, the sneaky thief. Inflation, basically the invisible enemy.
So you've earned some money, you've put it in the bank, you feel pretty safe, right? Well, there is a boss in this game just waiting to attack you. It's an invisible economic force that constantly tries to steal your money's power. We call it inflation. Think about your favorite snacks or the price of a fast food meal. Have you noticed they seem to get a little bit more expensive every single year? That is inflation in action. It happens when prices rise over time. When more money enters the economy, but the amount of actual goods, like shoes, cars, and groceries, stays exactly the same, you just have more money competing for the exact same products. So naturally, the prices go up.
And this brilliantly illustrates the concept of purchasing power. Now look, a small amount of inflation is actually totally normal for a healthy economy. It keeps things moving. But too much inflation is dangerous because it rapidly reduces what your money can actually buy. If you stuff a $100 bill under your mattress today and leave it there for 10 years, it might still look like $100 when you pull it out. But because of inflation, it's going to buy you significantly less stuff in the future than it does today. Your money is slowly, silently losing its muscle.
Which brings us to level 4, the power of interest, the central bank seesaw.
So how do we fight inflation and keep this whole game fair? Well, this is where the game's moderators step in. They're called central banks, and they influence the entire economy by tweaking one massive dial, interest rates. It works kind of like a giant seesaw. When inflation gets way too high, central banks raise interest rates, which makes borrowing money really expensive. Because it's expensive, people spend a lot less, businesses invest less, and inflation finally starts to slow down. But on the flip side, if the economy is struggling, central banks lower the interest rates. Suddenly, borrowing is cheap again. People go out and spend more, businesses expand, and the economy grows faster. Finding the exact right balance on this seesaw is basically one of the biggest challenges for every single country in the world.
Okay, we've made it to level 5, how investing builds wealth, the ultimate cheat code.
Up until now, we've pretty much been playing defense, right? We're understanding money, watching out for banks, and fighting off inflation. Now we're going to pivot to offense. Beating the wealth gap means moving past just protecting your cash to actually growing it. Here is the golden rule you absolutely need to memorize. Saving protects your money, but investing helps it grow. While keeping your cash in a basic savings account feels incredibly safe, remember that inflation is slowly eating it alive. Now, investing does carry risk, yes, for sure, but historically, it has produced much, much better long-term returns than just hoarding your cash. And here is the ultimate cheat code, especially for someone your age. The earlier you start investing, the more a literal mathematical miracle called compound growth works in your favor. Your money makes money, and then that new money makes even more money. It snowballs.
So, what do successful investors actually buy? Well, they buy assets that create income while they sleep. This means they're making money around the clock without having to constantly clock in for a shift. Wealthy people invest in ownership. They own pieces of businesses, rental properties, stocks in the stock market, mutual funds, or even intellectual property, like a hit song or a brilliant patent. These assets do the heavy lifting for them day in and day out. And that brings us to the actual root of the wealth gap. A lot of wealthy people do not rely only on a salary. Think about it. If you only ever trade your time for money, like working an hourly job, you are eventually going to run out of time. There are only 24 hours in a day, no matter who you are. True financial freedom comes from fundamentally shifting your focus. You have to transition from solely trading your time for a paycheck to acquiring assets that work for you 24/7.
See, the financial system really isn't as mysterious as it seems once you know the rules of the game. Money is built on trust, banks create credit, governments manage the balance, and investors build real wealth through ownership. The more you understand these fundamental principles right now, the smarter the financial decisions you're going to make as you get older. I want to leave you with this final super powerful thought from our sources today. The people who understand money don't just earn it, they make it work for them. So, the real question is, now that you have the cheat codes, how are you going to make your money work for you?